Good afternoon, everybody. Today is Friday. It's the 23rd of March, 2012. Let's take a look at these markets. We'll start with these tables here. You can see that we were mixed for the week. The S&P 500 was down 0.5%. Nasdaq was stronger. It was up 0.2%. Apple continues to be a big part of that, obviously. And the Russell 2000 backed off a little bit below that 83 level, which we know is important. And the rest of the market's kind of quiet in here. So let's take a look at the charts here and see where we're at. We had a test of the 20-day moving average today, and that moving average obviously is coming up to meet price as well as prices coming down. It didn't quite reach it. Today's low was 138.55, and the moving average is at 138.37. The proper way to use a moving average is more as a reference point, not that you want to stick a bid right there. But I had mentioned on Twitter earlier today that I thought there was a possibility we're going to head back down towards that 130 level because that's where I'm sorry, 138 level. That's where we had seen this previous resistance, and that's where the 20-day moving average is. Now for the week, again, we were kind of flat in here, but we did undercut this level at about really 140. I think we need to see this market get back above 140 to think that the uptrend is going to re-exert itself, rather than maybe just a consolidation through some time, as though it appears we're seeing right now. If we go back, though, the last time we were below a declining 5-day moving average was about 2.5 weeks ago, and we gapped up through that and recovered very quickly, and that's been the basis of this bigger rally of the last 2 weeks. So what we were looking at on the website as well earlier this week, alphatrends.net, that is the retracement levels, and we came down basically to a 38.2% retracement. And these charts are brought to you by Realtick. Realtick's the sponsor of this technical analysis show every Friday from here on out, and so I would encourage you to take a look at their site, not just for the charts. That's basically what I use to show you guys each week, but it's a full-blown trading platform for stocks, futures, options, forex, etc. So check out realtick.com and thank them for bringing this to you. Anyways, we have this prior support level at that 140 level that appears as though for now we have to treat it as this potential resistance area. We've got the declining 5-day moving average, and it's possible we're going to get a quick recovery like we did last time. But anytime we drop below an important support level and then we have a declining 5-day moving average, it tells us that basically the light goes from green, as it was over here, to yellow. It doesn't go red. It doesn't mean sell short the market. It doesn't mean that we've changed and this uptrend is no longer valid. We've still got plenty of levels that look like they'll offer support, and basically at 138, I think next week is going to be important because we've got the 20-day moving average just above that 138. We've got this trend line off of the December lows, so we can see that actually. Let's take a look at the 130-minute chart, and so do I have enough days in here? Let's take a look. Let's just add 20 more days, and we can take it off of this low, and the low of 2.5 weeks ago. Right around in that area was this prior resistance as well, and that goes back to, over and over again, what's the psychology of these levels? The psychology is the prior resistance tends to act as support and trend line, so there's buyers tend to congregate near there, and if there are aggressive shorts, they'll tend to put in their some bids to cover some of those positions, so they can take some profits as they're shorting against the primary uptrend. And again, these markets are in primary uptrends. They're innocent till proven guilty. That's the way you have to continue to look at it. We're holding above last year's high. That's this line right here, the second one I just drawn, and it appears as though the more important level above us that has the potential to offer resistance, if we can make it up there, is at about that 144.5-ish area that was prior support in 2007, and then big resistance that led to the real big fall in 2008. Let's take a look at the Nasdaq. It was down 4 pennies today, but again, for the week, another positive week, and by 0.2%. Apple was a big part of that. Apple was up once again this week, and they had their dividend and buyback news. Apple did close below the 5-day moving average for the first time in a little bit here. We've got a little support at 595-ish too. people continue to email me and tell me that they've got the indicator that tells them Apple's made a top and that sort of thing. They've been emailing me that for the last 150 or so points. It's it's in an uptrend. There's if you don't believe what you're seeing, rather than fighting it, you're better off, as they say, being on the sidelines, wishing you were in, than it is to be in and wish you were out. In other words, I think a lot of people who've been trying to pick the top in shorting Apple are wishing they had not gotten involved. But back to the Nasdaq, a lot of it's driven by Apple, as I think it's 18% of the weighting of the Nasdaq 100. I think I read this week. But this has just been this incredibly powerful uptrend. We've got the 20-day moving average down near about that 66 level. That could come into play next week. We have this 66 and a half area that's kind of going to be an important level, I think, early next week. So in here we have a lower low. We don't have a lower high. I'm sorry, we have a lower high. We don't have a lower low to go with it yet. So the intermediate term trend is not down. But if it breaks below 66 and a half, I think you want to get a little bit more defensive and think that it could lead to a movement down towards this bigger level of $65 a share. Again, we're in a giant uptrend, and there will be pullbacks along the way, but the primary trend remains innocent till proven guilty. We've gone beyond all levels that look like they should offer resistance, and the market continues to march higher. So listen to price action only. I had made the example on StockTwits on Charlie that last week we were taking a look at the muni bond index because there was a lot of news that Meredith Whitney was starting to downgrade all these guys again, and I said, listen, we're at this prior resistance. Resistance tends to hold as support. We're at that rising 20-day, 200-day moving average, and we have seen a bounce. Now the trend is broken in the muni bonds, but the important point is the bad news and the real loud news came out down here, and when that news came out is when the stock began to sell off. I think that if you look at Nike, for instance, they had earnings today and positive things to say, and the stock sold off. Well, why was the stock down on good news? Because people were already anticipating it, and they took some profits here. So price pays. I've been saying it for years, ad nauseum. And anyways, let's take a look back again at the Nasdaq. Those are our important levels: 66 and a half, then perhaps down towards 65. The Russell 2000, as we know, we had this bigger range of 81 to 83 earlier this year. We broke down and came down, tested that rising 50-day moving average. From that failed move lower, we had a fast move higher, right to the high end of the range, and then we broke out beyond it earlier this week. So we broke beyond that 83 level, and then that 83 has been acting as resistance. Well, it doesn't mean we're going to fall apart because we've still got this 81 level in here today. In today's low was 81 and a quarter. So I think that we still have to look at 81 even as a very important level. So we're back to kind of this neutral sideways range within the context of a larger uptrend, though, for the Russell 2000. So don't be quick to call this thing bearish. We've still got a rising 10, 20, and 50-day moving average, and today we had 2,119 stocks advancing and just 859 decliners on the New York Stock Exchange. So we've still got good breadth, good overall participation in the market. The semiconductors really hold up well also. The bigger picture here, perhaps we're going to head for last year's high near about $37 a share, but we're innocent till proven guilty. We've come down, and testing this about 35 and a dime, I think, is going to be an important level early next week. If we break that, well, we've broken the uptrend line. Now it appears as though we have the potential that this is distribution. If we break below the 35.10 area, then we would expect a little bit deeper pullback, a stage 4 on this intermediate term time frame. But it comes within the context of a bigger picture stage 2 uptrend. So that says that you don't get aggressive on the short side, but you sit on the sidelines, maybe to make some short sales on a day trade type basis. But perhaps we would be heading back down towards that 34.5 level. We know that's been important. Anyways, near term, I would call this probably more neutral than anything. But if we break down below this week's low, basically we'll just call it 35 and a dime. Back below 35 and a dime could be a little bit bit of danger, but otherwise we're just consolidating for now, and that's the way you want to look at it. The burden of proof is on the sellers, as we are in uptrends in all these markets. The financials, you're starting to see people believe who are some of the largest critics of the financials throughout the year. We had seen people saying it's going to be the 200-day moving average that holds it back. It's going to be this prior level. Well, that resistance was held as support, as we know. I don't need to retell history here. We've got it on the chart. But the fact is, we remain in an uptrend. We've got higher highs and higher lows. We're at potential levels where maybe we're going to encounter resistance, or maybe we're going to just blast right through there. It's a potential area of resistance up near about 16. We came close to that $16 level. We could basically say we hit it this week, but the sellers aren't coming in aggressively. Now we did break, this 1570, 1580 has been an important level, and right now I think we need to see it back above 1580 to really feel like the buyers have really gained back control. But for now, it looks like a sideways correction, really, slight pullback. But this prior $15.50 level will be important early next week. If we break the 1550 level, then I think you want to get more defensive, and then perhaps we would see a pullback even down towards 15 and a dime. The buyers remain in control. Perhaps they're getting a little bit tired. The market has arguably been overbought, based on numerous oscillators and indicators, and just by the feel of it going up every day, close to every day. But the fact is, the buyers do remain in control, and until the sellers come in aggressively and these markets break important support levels, stay below moving averages, and those moving averages begin to decline, the easier money in this market is going to continue to be made on the long side. Hope everyone has a good weekend. Thanks for tuning in.